All right, welcome back to Yahoo Finance Live. Millions of Americans are considering retirement as we kick off the new year, but coming up with the best strategy amid a volatile stock market and high inflation ain't easy. Retirement Planners of America senior retirement planner Ken Moraif here to help us kick off our Retirement Ready series brought to you by Fidelity Investments. Good to see you, sir. So as we start this new year, whether it's short term or 10 years or more away, what's the first thing you want people to think about and to check off as they consider their retirement?
The most important thing, well, it depends on the period that you're looking at. So we look at the 5 years before you retire and the 5 years after you retire as the single most important decade of your financial life. And the reason why we say that is because no matter what you've done for the previous 20 or 30 years to get you to that point, if you experience a massive loss in the markets, it could change everything. So risk control is incredibly important in our view. So how do you do that? Well, you look at the amount of risk that it takes to accomplish your financial goals. And we have a philosophy that says you should only take as much risk as is necessary to accomplish your financial goals. So if you can get there at 4%, then that dictates a different way of investing than if you have to get there with 6% or hopefully not 8%. So risk control is the number one thing. Determine how much risk is appropriate for you and proceed accordingly.
Well, Ken, there are certainly a number of changes that people do need to consider. The Secure Act 2.0, many of these has a number of provisions, I should say, related to retirement savings. When it comes to that specifically, what are the most important things that people need to consider when they are preparing for retirement or if they're already in retirement?
So Secure Act 2.0 has basically given us some planning options with regard to when you turn. It used to be 70 and a half, you had to take required minimum distributions. Then it became 72. Now it's 73. So you can actually grow your money within your IRAs for a longer period of time before you're required to take money out. There are some advantages in terms of being able to put more money into your 401k if you're over 50. So there are a lot of planning opportunities that they have created to help to build that retirement, to get to that point where you can retire with what we call your magic number. So taking advantage of those opportunities is a slam dunk. If you put more money into your 401k, hopefully you get a match, which is free money. You get a tax deduction potentially, which is also a subsidy. And you add all that up, and there's nothing that we can do that is better for you as a financial advisor than to, I guess, put your retirement savings on steroids and maxing them out. Very important that you do that.
And Ken, let's focus on that next 5-year window. And given the market volatility, given we've still got some rising rates and at least probably a hold throughout this remainder of the year, how do people factor that in when they're considering their retirement?
You know, when you asked me the first question, what's the first thing that should come to mind for somebody who's within that decade? Yeah. And that is risk control. I talked about, how you diversify your portfolio to maximize the return you get, but only given the risk that is appropriate for you. There's another component to it that I think is very important, and that is to protect what you've built. Because once you retire, or if you want to retire, that magic number that I was talking about, you need to do what you can to defend that. And so we believe that the philosophy of buy and hold is incomplete. Certainly you should buy investments. Certainly you should hold them. You should prune the tree, rebalance, make sure you have the appropriate investments. But we think there's a third component that is extremely important, maybe more so than the other two, and that is you should have a sell strategy. Now, I know that sounds crazy because you've been raised to think that you should forever buy and hold. But once you get in that decade, we think that protecting principal is very important. We have a strategy we call Invest and Protect. It told us to sell in April of last year. We've been out of all stocks and all bonds since then. And the reason why is because protecting your principal is as important as determining how much risk you should take.
All right. Ken Moraif, Retirement Planners of America. Great to have you, sir. Appreciate all those tips for us.
Thank you for having me.